We're going to get rolling. Welcome, everyone. My name's Claire Rice. I'm the Executive Director of Arts Alliance Illinois. So very happy to have you all here with us. Today we have a large number of registrants, which probably means a large number of questions about this brand new grant program. And we have Jason Horowitz here with us from the Department of Commerce and Economic Opportunity, who is rolling out this grant program. And I believe he's going to be joined by Kara Bader, also from DCEO, perhaps later in the webinar to address questions as well. So we know we have those questions. I know you have a lot of questions that we're going to focus on your questions during this session. So please post your questions in the Q&A box. And then there's a little thumbs up like button underneath that Q&A box. Take a look at that. And if that's a question you share or you think that question's important, if you can like it, that shoots the question up to the top of the list, which helps us pay attention to it and prioritize. And then please feel free, of course, to use the chat for saying hello to one another and other sorts of greetings or comments. But for questions, if you can use that Q&A function. I know it's already vibrant and we've had a lot of questions submitted in advance as well. This panel is being recorded. We will send you the video if you need to hop off for any reason. You can, of course, forward that to your networks as well. And a huge thanks to our partners and co-presenters on this webinar. We had them listed on the registration. We had them listed on our welcome slide there at the opening, who helped promote today's webinar and get the word out about this grant to our creative community. And then, of course, I want to thank DCEO for hearing our advocacy, for seeing our creative community, for seeing the devastation that we're facing right now as a result of this crisis, and being able to direct some of this CARES funding from the Federal Relief Act, the last Federal Relief Act was passed, to our most heavily impacted industries. So I'm going to turn it over. I'm also going to preemptively introduce my colleague, Jonathan, who's over there. Many of you know him already from our previous policy briefings and webinars. Jonathan will be moderating the Q&A today with DCEO and helping to manage your questions. So thank you all for being here. We're here for you. We're continuing to fight for you. We need you standing with us at the Alliance. And we look forward to continuing our collective action on behalf of the creative sector. And Jason, I'm going to turn it over to you.
Thanks very much, and thank you for having me here. Excited to talk to you all about the next phase of this really important program called Business Interruption Grants that we're launching here at the Department of Commerce. I'll go ahead and share my screen, and I have a presentation that I'll go through pretty quickly because I know that there's a lot of specific questions that folks have, but I think it's probably good to sort of set the framework here first. Can people see that? Are we good?
Yep, you're good, Jason.
All right, cool. Okay, so Business Interruption Grant Program. This is the second round of this program. It's a $540 million program that was established by the General Assembly and Governor Pritzker using CARES Act funds from the federal government. Half of that money, $270 million, is going to child care providers. The other half is for small businesses throughout Illinois. $49 million was awarded in the first round to 2,800 businesses all over the state. That round was fairly narrowly defined to really address folks who were closed in phase 3 and then also tended to be relatively small operations that really needed support to get open in June and July when there were going to be new guidelines. So that was restaurants, personal care services, gyms, and fitness centers, and also businesses in areas where there had been property damage due to civil unrest. So that was the first round. We've awarded about $50 million from that round. We're now in the second round. In this new round, approximately $200 million is available to small businesses statewide that have experienced losses due to the pandemic. More than half of those funds are earmarked for businesses downstate, But you can apply no matter what county you're in. It's just over half of the funds are earmarked for businesses downstate. And the reason for that is this comes from the same funding source from which 5 Northeast counties received a direct allocation. So those 5 counties already have their own federal funding source. So that's why the legislature made sure that a fair amount of those funds are going outside those 5, a fair amount of these funds are going outside those 5 counties. $70 million is going to what we're calling disproportionately impacted areas. So that's, you can find that map at the big website. So if you just Google Illinois Business Interruption Grants, you can find a website that has a lot of information on it, including the map. And there's also a PDF right next to the map that just has the list of all the zip codes that might be easier to use. $60 million are set aside for heavily impacted industries, and we'll talk about that a little bit more in a minute. And then the remaining funds outside the 60 million are available to basically any small business that meets some pretty limited eligibility factors. So if you're a small business in Illinois, chances are you are eligible to apply for funds through this round. And we're working with our partner Accion, and also actually WBDC is working in partnership with Accion to help us administer this program. And so one thing I want to clarify, it's not like when I say more than half of the funds are downstate and 70 million are for disproportionately impacted areas and 60 million are for heavily impacted industries, there's like overlap between those groups, right? So like there's disproportionately impacted areas downstate, and some heavily impacted industries are in disproportionately impacted areas and some are not. So that's not like, those aren't like exclusive categories, right? There are people that sort of meet all of those requirements that will be applying for these funds. Okay, so eligibility. Eligible businesses include for-profit and nonprofit entities with $20 million or less in annual revenue in 2019. And if you're a business that started after January of 2019, that it would be annualized based on, you know, the amount of time that you have been around as a business. And you have to experience losses since March due to COVID-19. And that includes, for example, just diminished demand for your industry due to the economic hardships that we're facing. The grant size ranges from $5,000 to $150,000. It's going to be based on revenue losses and or expenses that you've incurred over the last 2 months. Priority is going to be given to applicants that have not already received emergency aid from PPP or the CARES Act or EIDL or any other programming. Priority is going to go to applicants that are located in these disproportionately impacted areas. We're going to prioritize applicants that are in a region where there's been a COVID resurgence. So as some of you might be aware, for example, in the Metro East area right now, you're not allowed to dine indoors. So that's an example of where we would be prioritizing, you know, restaurants and bars that are affected in that area because of those mitigation measures. You're also going to be prioritized if you have less than 5 million in annual revenue. And again, that's a priority, right? So even if that doesn't apply to you, I still encourage you to apply as long as you are otherwise eligible. Heavily impacted industries. So as I mentioned, $60 million of these funds have been set aside specifically for businesses that fall into a set of these industries that have been closed or basically, you know, nearly completely shut down since mid-March and are likely to continue in that condition until, you know, really until we have a vaccine. So these industries include event spaces, music venues, performing arts venues, indoor recreation, amusement parks, movie theaters, museums, and then charter and shuttle buses. So these are all industries that have, you know, really high fixed costs, right? A lot of them have like, you know, they're actual, you know, they own some or rent some sort of structure. So they have very, you know, large rent or mortgage costs. And they also might have like high debt and insurance costs as well that go along with it. So that's why they've been included as these heavily impacted industries. And if you are in one of these industries, and I suspect many people on this phone call are, we really encourage you to apply. We estimated this amount of funds to allow us to basically reach almost everyone in these industries in the state. So if you apply, if all of your, paperwork checks out, then you're very likely to be able to get a grant if you're in one of these industries. For the remaining $140 million, again, basically anyone can apply. That's, again, below $20 million in annual revenue that experienced losses due to COVID. Now, there's going to be additional prioritization within that $140 million bucket, but again, that's just prioritization. So anyone can apply and still get the funds. We're going to prioritize independently owned retail, restaurants and bars, fitness centers, tourism-related industries. So that includes lodging and accommodations, but also, short-term car rental, passenger transport, tourist destinations, that sort of thing. And then finally, support services for arts or events. So that might include hair and makeup, catering, sound design, equipment rental. There's a range of different things that fall within that category as well. For outreach and technical assistance, we're working with 4 nonprofits in Illinois that are doing outreach and technical assistance in particularly hard to reach communities. If anyone is interested in making sure that they partner with one of these groups, we can make sure to give you their information and give you an ability to reach out to them. We also have DCEO has our own frontline team that's happy to work with you and help you make sure you have what you need for the application. So we have a hotline that you can call. We have SBDCs. The Office of Minority Economic Empowerment is going to be doing a range of several webinars on this. The Regional Economic Development Team is going to be doing several webinars specifically, in regions throughout the state. Please feel free to reach out to those groups if you have any questions. So here's the timeline. September 15th, 2 days ago, we made the application available for review. We're accepting applications, I believe, right now, frankly. I think we launched it just like an hour ago, probably. And grants will be awarded and funded on a rolling basis. And I know what, half the people on this call are thinking. They might have already dropped it because they heard the applications are alive and it's a rolling basis. So they want to go get their application in as quickly as possible. But I think the number one thing, if you take away anything from this webinar, is it is the quickest way or the easiest way to get rejected from getting one of these grants, if you are eligible, is to have an error-ridden and incomplete application that does not have every document that we've asked for, or used Google Forms to fill out the thing, so it's put in your address under the county field. So and there's a lot of money here, so I highly recommend that you really take your time, make sure you have all the documents together, make sure you understand the eligibility guidelines. If you have questions, submit them to Acción and wait for them to respond. And especially if you are in one of these heavily impacted industries, you're really not under the gun. You're much better off just making sure that you provide a good application. And just as an anecdote, in the first round, I mentioned we gave out 50 million. We wanted to give out 60 million, but and enough people applied for us to give out 60 million, but we rejected many of them because they just didn't provide the documentation that we needed. And then, when in the back and forth requesting further information, they just didn't respond, or, there's a range of reasons why they might not have, but they could have been found eligible if they had just initially had all the right things together and submitted a good application. So again, I think it is much better for you to make sure that you have all of your ducks in a row and that you've filled out everything correctly, dotted all the I's and crossed all the T's in submitting your application than to submit it, in half an hour to make sure you get in under the gun. So the links to the application, eligibility guidelines, certification, checklist for required documents, those are all available now at the big website. I really recommend that you read the eligibility guidelines closely. It has more information on how we define these given industries. So if you're thinking, am I an event center, or am I do I provide support services for the arts? You read those eligibility guidelines. We're pretty specific about what we include in those categories. And then finally, and these links are also available at that website. If you have any questions at all, there are links both in English and Spanish to submit a question to Acción via the question submission form, and they're very responsive to that. In the first round, they answered 100% of questions easily before the actual application round closed. So yeah, I highly recommend taking advantage of that. But before you do that, go ahead and read through those eligibility guidelines and certifications. Each one is just 2 or 3 pages long. It's not a tome, so I highly recommend that. And I think that's all I had in terms of the presentation.
Yeah, that's really, really helpful, Jason. We appreciate you coming on. We have, as you can imagine, a lot of questions based on the need and this opportunity. So we're going to try to fit in as many questions as we can. Some of them will kind of be clarification questions too, based on the audience we have on the webinar. First, we have a lot of organizations that produce arts programs, produce performing arts programs, but they are not themselves a venue or an art service organization. So for clarity, can they apply? Are they eligible?
Yes, they definitely can apply. As I said, basically anyone can apply as long as they have revenue below $20 million. But they would not be among those priority or heavily impacted industries. But I still think, this is a lot of money. So I think it's very likely that the grants will go beyond those priority industries. So I think that it's definitely worth trying to at least put your hat in the ring and submit an application, even if you aren't in one of those industries.
And you mentioned a range of grant amounts. How will the specific amount be calculated or determined?
So there's a couple different ways it'll be determined. So one will be based on 2 months of fixed expenses. So for the industries that are in the heavily impacted categories, it will be based on the nature of the expenses they face over the last couple months, and up to $150,000 in those core expense categories. And then for everyone else, it'll be based on revenue loss from the previous year for the last couple months. Again, so it's over a 2-month period. Again, also up to $150,000.
And if an organization has received a PPP or an EIDL or EIDL advance, are they then ineligible no matter which one or how much they received? How does that work?
No, so they're still eligible. So there's a couple caveats there. Number one, they're eligible to apply, and they should. They will not be in the priority category if they received a PPP. But I guess the one caveat, which probably will not come into play, but it's possible it could be an issue for some companies. If you've received a lot of emergency support already, you can't sort of double. You can't have had the amount of eligible expenses that you've incurred for that support since March to be greater or to be less than the amount of support that you've actually got, right? It has to be covering some actual costs or losses that you face. So there could be some sort of issue if, the grant that you're eligible for exceeds the costs you face over and above what you've gotten forgiven through PPP, for example. And there's actually a sort of 1-page document on that on the big website as well that sort of, explains that issue a little bit more about how you're not allowed to use these emergency funds from the same source. You can't apply them, multiple times for the same expense.
Yeah, I mean, it's kind of similar. You can get a PPP, you could get a PPP and an EIDL, but you couldn't use them for the same. You needed to keep them separate boxes, so to speak, in terms of.
That's right. That's right. And I think at this point, right, my understanding is at this point, that's probably not an issue, right? For 99% of companies, they've basically spent the money. But just you should be aware of it to make sure you're not running afoul of those guidelines.
This question I'm actually going to read because it's detailed, but it gets at some important things. So could you clarify what is needed in terms of some of the required documents for heavily impacted industries? So first of all, for a performing arts venue, if that venue has no paid staff or payroll, do you want them to list the stipends they have paid for artists? Does that qualify? Can that be entered?
Wow. I don't think so. No, I don't think that would count towards the expenses that we're including here.
And also, one thing that we can also do too is if there's information that you want to get out, Jason or DCO, relative to this opportunity or any of these questions, we're, of course, always willing to help get it out to the field too. Okay, so for rent and utilities and insurance, as some of the people on the webinar look at this application, are you looking for copies of actual bills?
Yes, that would be great. Yeah, if you want to go ahead and provide the actual bill for the months of July and August 2020, okay. That would be excellent.
Or can they also use an internal report or bank statement when they apply?
Yes, yeah, you could use that. You could use, I know some people you might not get a bill every month for your lease, right? Mm-hmm. So if you just have a copy of the lease and, that would reflect what your monthly rent is, for example, that would also be sufficient.
And as we looked through the application, the questions on the application, it does ask for a business owner towards the start, yet some 501c3s don't really have a business owner. So how should they address that question?
Yeah, so in that case, it would be sufficient to have in the executive director or someone in leadership who sort of has the ability to make decisions on behalf of the organization, to sort of be in that role of business owner. And that would also be the person who needs to provide an ID under documentation, where we ask for a business owner ID. They would provide, their state ID or driver's license, something like that.
And apart from stipends to artists, are payments to 1099 contractors, do they count towards payroll too?
I'll get back. I don't know if we've gotten that question before, and I think the answer is no, but I will confirm.
We're challenging you with a lot of tough questions.
Well, it's complicated. That's fine.
No, I know, but it's a good opportunity. So if they do not have a 2019 tax return, which is might be the case for some applicants, should they use their previous year's tax return, or what documentation would be needed as we try to carefully submit these applications?
So for example, some people, this was definitely a big issue in round one because we actually did it before the tax deadline. But I guess there's some businesses that might have gotten a deferral, for example, from submitting their taxes. The way that we remedied that in round one was accepting the 2018 tax return. I will confirm that we're willing to do that as well in this round, but I believe that's the case, that you can just submit a 2018 tax return if your 2019 one isn't ready.
Okay, and we can definitely help get this information out there. And for those of you, if you missed the answer to a question, we are recording this and we'll make it available afterwards if you're taking notes and you missed something. The application, as we kind of look through it, also talks about business insurance for July and August. How is that shown? Is that shown through bills or invoices, or what documentation is needed for that?
Yeah, so it would be similar, and there's all kinds of different insurance, but this is for at least several industries, this is a common cost that they haven't been able to get out of, right? Even though they've been shut down. So it's something we wanted to include. So really any form of insurance you might have, right? Workers' comp, property damage insurance, fire insurance, whatever. There's probably three things that are actually more significant than that I didn't think of. I would say put the most recent bill that you've gotten for it. So I know it's not always a monthly thing, right?
Yeah.
So if it's monthly, then that's easy. You can include whatever the monthly bill was for July and August. But if it's something that you pay every 6 months, for example, you can include that. And then what our partners would do is just estimate the monthly breakdown of that based on, divide the amount you owe by 6 to get an estimate for the monthly cost to you of that insurance.
And kind of continuing along those lines, when we look at utilities, what constitutes a utility? I know the PPP loan kind of involves some of those definitions, but for this purpose, what constitutes a utility and how should that be documented? Again, is it bills or invoices? Or?
Yeah, it's bills there again. So it would be, and tell me if I'm missing one, because we can go back and see if we should include it. Water and sewer, gas, and electric. Is there some other form of utility that we might not be including there? It would not include telecom, for example. That would not be included.
Okay.
And,
can various technical services or technology permits or licenses be put towards that?
for utilities?
Yeah.
No, I don't believe so.
And then this is pretty rapid. This is pretty rapid fire, so this is impressive. But in terms of, so as we look through the application, as people go through the application, beneath the heavily impacted industry kind of definitions, must, say for a music venue, for example, must all of those be met that are listed there? I know there are some venues, for example, that don't charge for tickets and make all of their funds through sales of of or through bar sales. So that kind of revenue of 50%, that can be, for example, just food sales and not ticket revenue. They don't have to meet everyone in that list.
That's right. So if you look at the eligibility guidelines, the 50% includes, so for example, if you're a performing arts space, that, that 50% number includes, and this is spelled out in the eligibility guidelines, which are available on the website now, includes both ticketing and admission fees, as well as, food and beverage sales that you might incur as part of like that performance. So it's really all of the revenues, or if you're an event space, for example, it would include, I don't know, if you like rent out the AV and do catering, for example, for the events, it would include revenues generated from that too. So it's really, all of the revenues that you get that are tied to, the events or the performing arts performances. That's sort of included in that sort of 50% number to make sure to qualify as an event space or as a performing arts venue.
But it's specifically earned revenue. So if you're not nonprofit, it's not, say, grant revenue or contributed revenue to make that possible. It's specifically tied to the event, to the earned revenue.
Yeah, so maybe I'm misunderstanding the question. So is this, is the question whether a nonprofit that makes more money, for example, fundraising, and then through those revenue sources, whether they would qualify as a heavily impacted industry, or is it whether those funding sources are taking into account when determining their grant?
The first one. So
the first one,
for example, if I understand it correct, any organization, any arts organization that's been impacted and meets the general criteria can apply. But with respect to falling under the set aside for heavily impacted, and then with the venues in meeting that 50% revenue, is that just earned revenue that's taken in by, say, the nonprofit?
So it's the share of, let me put it this way. It's the share of your operating revenue that is derived from that activity, right? So I wouldn't even enter any sort of fundraising into that calculation, right? It's if the share of like what you do is you know, a performing arts venue is more than 50%, even if you raise, you know, even if most of your revenue comes from fundraising, it's the share of operating revenue. So I think that's something that maybe we can clarify in the eligibility guidelines to make sure that that's clear. We wouldn't want to exclude someone who's obviously a performing arts venue from that category because they do a lot of fundraising, right? What we mean is like the revenues that you derive from your actual operations. Yeah.
I mean, that's really helpful. That's an important distinction because we do have venues who are historic in nature or others, and they do fundraise in order to make that possible. But again, just to clarify, because it is important, if I hear that right, it's looking at the operations based on the event, right?
That's right.
Okay. One question that we had and first of all, we've now doubled the expertise. Kara, welcome.
Hi, I'm struggling to unmute myself. You are in good hands with Jason, but I'm taking this opportunity to furiously catch up with the chat Q&A. So hopefully, you know, you have 100% more DCEO expertise that can help answer questions. Just want to say thanks everyone for participating today. And if we don't get questions answered now, we will be sure to follow up and get answers as quickly as possible. So thanks.
Well, thanks. It's good to have you on. It's good to have you on. We've had a question come in from actually quite a few people. If they applied for round one and were not accepted, the application was not accepted, can they apply again? Can they reapply for this round two?
Yes, they can.
They can. If they received an award in round one, can they apply again? Or is
yes, they can.
Second round, they can't apply for a second.
Yeah, and so there's a priority for folks who have not received assistance yet.
Okay.
But they can apply for round two again even if they receive something in round one.
Okay, and then just to clarify, when we look at defining a venue, whether it falls in heavily impacted or not, is there a certain percentage of the organizations or businesses activities that need to fall within that industry definition in order to be in that set aside?
Yes, and that's all outlined in the eligibility guidelines. And for most of the heavily impacted industries, it's that 50% of what you do at least has to be that thing. For event venues, it's actually 40% because we were talking to a lot of event folks, and most event spaces are, you know, an event space plus a hotel or an event space plus a vineyard or you know, so that that one's actually only 40%. But for almost all the other heavily impacted industries, it's at least 50% of what you do.
Okay. And again, I also think it's really important just to reiterate the point you made earlier, that if you're an arts organization, whether a nonprofit or a for-profit, just because you don't fall into the heavily impacted industry doesn't mean you shouldn't apply.
Right.
Right. I think that's an important thing to emphasize. I'm going to read this question too, just straight. We provide rehearsal space to dance companies, theater companies, theaters, music groups, etc. Are they considered a support service?
That is a great question. I think that I think that if the majority of their clients are, if it is related to the arts, right? If the majority of the rehearsal space they're doing is, you know, music or dance or other sorts of performing arts, I believe, yes. I believe that would be considered a support service.
Okay. And many of our venues are just producing performing arts organizations have had, for example, canceled space or canceled rentals. Is that considered part of lost income? They were planning on it, it was there, but then was canceled?
No. So the way that we are, so what type of organization is it that's experiencing the canceled space? This would be like performing arts venue?
Yeah, it is a venue. Yep.
Yeah, so that would not be considered a loss. Again, the way that we're basing the way that we're sizing the grant for those heavily impacted industries is, and this is one of the reasons why, we're actually basing it on your expenses. So
Okay.
It's going to be based on, you know, the mortgage you had to pay for that space, the you know, electric, that sort of thing, those costs that you've incurred over the last couple months.
So it's really, I mean, it's really then based on, as you said, it's not based on estimated revenue losses. The amount is based on the hard expenses that you show and can demonstrate.
This is a little bit confusing, but for the heavily impacted industries, it's based on the expenses.
Okay. Yep.
For basically everyone else, it's based on an estimate of revenue losses. And that's actually going to be, it's relative to the same months in the previous year. So July and August, that's why we're asking for your bank statement from July and August of 2019 and your bank statement from July and August of 2020. Because we'll be looking at that to estimate the amount of sort of loss in receipts that your organization has had relative to last year during those 2 months. So for heavily impacted industries, it's based on expenses. For basically everyone else, it's based on that drop in revenue.
Okay. And just to back up a little bit, so we have this opportunity, these grants are available for any business or organization that's experienced business interruption, right? But there are priorities, there are set-asides. And I notice when applying for this, does the applicant really need to think which one they fit under, or is it more like a unified application that you show what you do and you answer the questions and then it's determined?
That's right. It's the latter. So it's one application. If you go through the application in order and answer the questions faithfully, and I again highly recommend reading the eligibility guidelines first so you can really understand which industry category you should be in, if any. Then yeah, it's everyone fills out the same application, and it's just if a question doesn't apply to you, it'll go away.
Okay, so people should be aware then that it's not like I'm going to apply for this set aside or this set aside. They enter the application, and you guys kind of sort that out.
Yep.
I'm going to read this question too. It says, my business is a music venue with a PPA amusement license and with a tavern license. If my answer to is your business any of these heavily impacted industries is yes, as we are a music venue, should I answer that their business is 100% of that, or do they look to the actual percentage?
So I guess it depends. So if they're both a tavern and a music business, I would put in their estimate of like how much of their business is derived from, you know, doing shows and food and beverage served at shows, for example.
Okay.
And it's like, so what share of your, you know, operations are that? That would determine whether you qualify as a music venue.
Okay. I'm looking also at the website, and I noticed that you can click on the link to get a PDF of the questions, but in finding the application on the DCEO webpage, is there like a specific application or online application that you have to fill out in order to apply?
Yes, but we like literally just put it up.
Yeah.
So yeah, there's a place called Apply Now.
Okay.
So there used to be just a PDF that had round 2 application questions.
Yes, that was just a little while ago. Yep.
But now you can click on Apply Now, and it directs you to the online application.
Okay, and we can provide that link as well. So for small nonprofits that only file with an e-card for tax returns, will you accept the annual report that goes to the Illinois Attorney General? And file a full.
Yes, I think so. So this would be small. So forgive me, I'm betraying some ignorance about nonprofit finances here, probably. So they wouldn't, for example, file a 990 because that only certain nonprofits have to do that.
Well, some can file like the e-card, the smaller the smaller version of it, so to speak.
Okay.
It's more getting at what documentation should they provide if they're a nonprofit.
Yeah, so for nonprofits, we've asked for the 990.
Okay.
So I guess if they do a smaller version of that, they should provide the smaller version of that.
Yeah.
If that's not clear, then follow up and I'll try to get a better answer for you.
Yeah. We also have a lot of arts education and arts youth development organizations that are in need of a grant such as this. If the question that we had come in is if they are a youth development organization and they don't charge for tickets, so part of their mission is to provide free performances, does that make them less competitive?
Are they a performing arts venue? Like, do they operate an establishment?
Some do and some don't, but for the sake of this, let's say no, that they use another venue or someone else's venue.
Right, so in that case, they should absolutely apply, but no, they are not they do not qualify as a performing arts venue. As defined for the heavily impacted industries.
Because with those, it's tied to the physical space, really?
Yeah, exactly. So do you own and operate, or I guess occupy and operate if you might not own it, right? But do you operate an actual performing arts venue is how you get into the heavily impacted industries.
That's an important distinction too, because you don't have to actually control the asset. You don't actually have to own the venue.
Right.
Operate it. So gross operating revenue in 2019 is something that it is asked. Is that gross receipts from the 2019 tax return? Did they pull that number down from that?
That's right. That's what they base it on.
Okay. And should they include their financial statements from 2019 or the most recently completed fiscal year, which was for June 30, 2020? I think we had that one a little bit earlier.
Yeah, so I don't think we're asking, if I understand the question correctly, I don't believe we're asking for financial statements.
Okay, that's good.
We're asking for bank statements and for records of certain expenses, but not we don't need a full financial statement.
Okay, so that's what they should focus on then in terms of applying. We have some organizations that their headquarters, their mailing address, or whatever, is located outside of a DIA, but serves several zip codes that fall within DIAs. And for maybe you can explain a little bit more again about what a DIA is and how that fits into this, how they were determined.
So disproportionately impacted areas are, and we should probably clarify this in the eligibility guidelines, so whether or not you'd be in a DIA. Disproportionately impacted areas are areas where there was a particularly high impact of COVID, and it's also an area that is a relatively low income area. So those were areas that were defined by statute that the legislature requires at least 30% of these funds go to those areas. Mm-hmm. If their headquarters, so it should be based on where the majority of your employment is. Of
your staff, not your service.
Exactly.
Okay.
Right. So if your headquarters just has a couple people in it, but you employ 30 people who work at a location, that's in a DIA, then I would recommend using that location as the business address.
Okay.
And we'll make that clear. And because the language we used last time was, I think at least 80% of your employees had to be located in a DIA, but we really are only asking for one address. So we would want you to include the address that where the majority of your employees work. Okay. And we'll also ask for proof of address as part of the application. Okay. So you'll need to include, the utility bill or the bank statement will need to have that. You'll need to have some sort of documented evidence that you actually operate out of that address if it's a DIA. It's in a DIA.
So we have a lot of I think the issue of 50% of the revenue being from ticket sales. We have a lot of questions kind of circulating about that. So I want to make sure that we have full clarity about that. Someone wrote, we're a nonprofit arts council that does not get 50% of its revenue from any of the categories of businesses listed. Are they eligible? So we're trying to get, because oftentimes the fundraising is considered operating revenue. That's what the fundraising is for. So just trying to get some clarity on what's considered earned revenue, what's not, but also when you look at 50%, what's the denominator? How do we?
Yeah. So I don't think an arts council would qualify as one of those heavily impacted industries, but an arts council could apply. It's, again, nonprofits are eligible to apply.
Yeah.
But I don't believe that any, I guess I'm trying to think. So would this be an example where they actually have a performing arts space, and they're thinking they might be under the performing arts venue category?
Yeah, I mean, I think what's helpful is it sounds like, and correct me if I'm wrong, but just to kind of clarify it, it looks like, if I'm hearing it right, when you look at the heavily impacted areas, maybe the first question to think through is the venue part of it. Like, is there a specific venue? Is that the way to think? Like, go through that in our mental thinking. Go through that door first, literally door, I guess, right? Venue.
Right.
Go through that first, and then think through the 50% revenue, right?
Yeah, that's right. I mean, I think for most people it'll be obvious, right? Oh, I'm a performing arts venue. That's what I do. I do it all the time.
Providing space.
Exactly. There's probably going to be some gray area, but I feel like that gray area isn't going to be, I'm an organization that doesn't actually operate my own venue, because like that's obviously not a performing arts venue, right? The gray area is going to be someone who's like, well, we have a performing arts venue, but like I also have a really big retail shop, and I also have, that's the one where, I don't know, you might need to do some math.
Yeah,
and
if they're
nonprofit. So,
fundraisers.
Exactly. So I think that's where the gray area might arise. But if you're, I think for most people, the primary question of, okay, do I have is the main thing that I do operate a performing arts venue that like puts on performances of performing arts? Then like, yes, that's what you are. You're a performing arts venue. So that's I think, just sort of the common sense response there.
But again, I think that one of the main messages is apply.
Yeah,
right?
exactly.
Even if you're not in a heavily impacted utility, it doesn't mean that you're not going to get.
Absolutely. And again, there's a lot of money here. $200 million, $60 million of it has been set aside for heavily impacted industries. That means $140 million is going to people who are not in those categories. And most people aren't, right? I mean, we did the math, and there's something like, I don't know, maybe 1,000 businesses statewide that fall in those heavily impacted industries. And we're expecting to give out, over 5,000 more grants. So, so that's, yeah, you should definitely apply, whether you fall under that category or not.
A repeated question, a very specific one. Is waste management considered a utility?
We really should have listed all these categories out, Kara. I'm not sure that we've
solidified
all that.
I'll be honest, I haven't been answering that one because off the top of my head, I don't know. I mean, existentially, yes, yes. But
I think so.
I don't want to overspeak our administrator's ability to review different utility categories, and so we might want to go back on that one after this.
Yeah, we'll confirm the utility list with you guys. I might have been wrong too when I made a comment on telecom earlier. So we'll confirm and share the list with you guys to make sure that and we'll also update the application to make sure it outlines exactly what the utilities are.
And Kara, I think, if anyone needs a puzzle to think through today, if is waste management a utility? It's a very practical question, but it's an existential one too. So we're gonna get a few more in here. Along that lines, when you look at business and ticket office phone lines and copy machines, are those utilities too?
copy machines. So phone lines, that's possible. I don't think a copy machine would be a utility. Are you like paying some utility to use their copy? I don't know.
Okay.
Telecom is possible though. Again, I think we'll get you a final list shortly after this.
One of the things about the art sector, creative industries, is the revenue oftentimes isn't consistent. Depending on when performances are planned, it can surge in one month and
yeah,
month.
That's a great point.
If you don't heavily produce events, say in July, but you've still experienced a heavy loss, because does that take it into account, or how should that be reported?
So the point is that for example, their revenues from July and August this year might not actually be that much lower than they were last year,
because of the.
But their revenues in April and May were a lot lower than they were last year, for example.
Exactly. Yeah.
I mean, so first of all, you should still apply because you know you could be eligible for some grant, and there could be some substantial funds there, even if the drop hasn't been as much as it might have been in another month.
Okay.
But I think that it's we're really just basing it off of July and August, and I think that if there's some sort of extenuating circumstance that needs to be explained, my understanding is and correct me if I'm wrong, Kara, there is a space in the application to sort of explain some unusual circumstance in your documentation that you think might not reflect or might be difficult to discern just by looking at the documents.
Yeah, so the way the application is set up is it's kind of like, document A, B, C, D, E, attach, and then there should be an open-ended field that is kind of like, is there anything that we should know about your application? Those types of nuances are good to put in. Our administrator said it more or less saves them the first email in question, maybe if it's something super obvious like that. And so if there are certain concerns they should be aware of as they look at and review the application, you can submit them in that field.
Okay. And then we had someone ask, they have 2 large nonprofit fundraising events, and those have had to be canceled. How are those considered, or how is that reported, or is it not considered?
Yeah, again, that's not considered, right? It's just what are your revenues? So I guess if that were an annual event, right? So it showed up last year, but it didn't show up this year, then that would affect the size of your grant. But if it's just, it was canceled and it's not necessarily reflected last year, then that wouldn't affect it.
We'll try to sneak in a couple more here, because I also want to be respectful of your schedules too. We're going to go till 5. So for expenses, what is the period that they must be? Is it only for expenses in the past, like July 2020, or can it be for a period in the future, like projected expenses, or can it be for a period that is both kind of a hybrid, projecting it?
So it's documents that reflect your expenses in July and August of 2020.
Okay.
And that's it.
And then a big one, do applicants have to be GATA certified?
No.
That has led a lot of people to be very happy, probably.
Yeah. I mean, we couldn't do this program if everyone had to be GATA certified.
Okay. Right. And for those of you who don't know what that is a Accountability Transparency Act, I believe, that you have to be certified through the state, but that is not required here.
Yeah. Yeah, this size of program would crash our systems and probably even the federal. It's on that too. We tried to get this many people GATA certified.
Well, I want to thank you. I know there are a lot more. We actually, I know you were answering some too, and we were trying to answer some through the chat and Q&A, but we've had over 100 questions. So This is more than just a game of 20 questions. You had a lot of questions come at you about specifics, and this is such a serious situation.
Of course.
For many people in our sector who are really struggling to get by. And so this opportunity is incredibly, incredibly important. And I wanna thank you, Jason and Kara, for being able to be on the webinar. Appreciate it, and to making yourself available so quickly to answer a lot of really detailed questions. We appreciate the work that you do. And I also want to thank our co-sponsors for helping us make this possible. We will gladly be a conduit for any information DCEO wants to get out. And we can follow up with you if that's okay with you, Jason, to try to get some more information and help make our sector aware of this.
Yeah, absolutely. Please do. We'd love for as many people as possible in this sector to be aware of this and be able to apply. And I see a lot of people commenting on issues with the application already in the chat. And I just want to remind folks of my most important point that I said at the end of the presentation, which is the most important thing, you know, even more important than hurrying to click submit as quickly as you can, is making sure that everything in the application is accurate, that all of your documents are together and you know, in response to the request. So just, you know, making sure you read the eligibility guidelines to make sure you've interpreted correctly whatever, you know, the question was in the application. So I think all those things are more important than getting your application in tonight, or even tomorrow for that matter, in order to make sure that you end up getting funded.
Okay. And then you're working with Action, right? Action is
right.
The entity that will be fielding questions. So if people hear Action and not necessarily DCEO, that's part of the...
That's right. So both, and actually Action and WBDC is partnered with Action. So it's possible that you will receive a response from either of them. And I'm glad you brought that up, because in the first round, we had some folks who weren't getting responses to their, you know, follow-up requests because people didn't know if they were legit, right? Because it wasn't coming directly from DCEO. Yes. So I'm glad you mentioned that. You will receive communications from Action or WBDC, and that is legit. They're working with DCEO on this.
Great, great. Well, again, I want to thank both of you. I also want to thank Casey, my colleague who you can't see, but has been helping us sort through, Casey Smith, helping us sort through questions. I think this is an example of advocacy works. We had a big campaign to try to raise awareness of the sector's needs. A lot of people participated that, and we are grateful for DCEO and the governor and you responding to that, and look forward to working with you to get this information out there. If I could, a few very quick notes to everyone out there before we sign off. The Alliance has initiated a pay what you can membership, particularly during this time of COVID. So we encourage you, we know it's a tough time for our creative community. We want you to be part of the Alliance family. And so you can go to artsalliance.org/join to learn more about membership and its benefits. And also the One State is coming up, and we're excited. It will be virtual this year. It will be we have a great lineup of panelists. Would love for you to attend. And I think we're going to put the registration link, but it's open for registration, and would love to see you there.
Can I add two quick things, Jonathan?
Please do.
Hi guys, I'm sorry. There's a lot going on, construction outside, etc. But it's Claire, and One State is free. Also very important to mention, so join us. And I will say that we would really, I know it's a work to apply, but we need to keep making the case to these two, Jason and Kara and their colleagues, that the arts sector needs this support. So if we get those applications in, it makes the case even stronger that the need is there. So I know it's a lot of work, but just really underscoring that need to submit those applications for this support so that we can keep making the case on your behalf that the need is there for this support. Thanks.
That's a great point. That's a great point. So thanks again, Jason, Kara, and we wish everyone a good afternoon.